Hello traders, I'm Ignat Borisenko and this is WaveTrading. Please let me know, can you hear me or not in the question box? So you can write, yes Ignat, I can hear you. So I'm waiting for your answers. And we're going to start today with Japanese yen, where we've got an example of a double zigzag pattern like WXY. As you remember, double zigzag, it's a combination of two zigzags in wave Y, in wave W, and in wave Y. Why I'm showing you it right now? Because we've got a quite interesting moment here on pound versus yen, where we've got this price movement, which could be like A, B, C, like a zigzag. Also, we've got two bullish impulses here. I mean, this one, which could be wave 1, and this one, which could be wave 1 of this wave 3. And that's a very good example about a moment when a correction could move on and we can have here not just a zigzag but a double zigzag. So in this case we could have wave W here, these two impulses in this case is going to turn out to be another zigzag like ABC, and then we could have a bearish zigzag, something like that. So if you see this kind of situation on the market, you should be very careful at this point where you can have a story with two first waves, and that's a reason I am not going to open the second long trade. I've got one trade right now with a stop loss at the break-even level, which means I am not going to have any losses here, but I'm not buying more here because at this point we've got, a risk to have this correction in a form of a double zigzag. Yes, I'm going to upload this recording maybe about 6:30 in Moscow. So what I'm going to do in this case, I'm going to wait. If we see something like this, I mean like ABC and a small bullish impulse in the direction of this wave 3, in this case I'm going to buy more and more during this impulse. But if it turns out like this, I mean, let's imagine ABC, ABC, and we've got this impulse, which could be, in this case, this wave A. So if it happens, I'm going to wait for wave B, and when it arrives, I'm going to sell to trade this impulse in wave C. So I'm prepared for both cases, and I'm just waiting what we are going to have here. Only a small correction and a bullish impulse. I mean, a story like this, ABC and a small first wave. So if we have something like that, sorry, what's happening? I mean, if we've got this situation here, I'm going to buy more. If we have something like this and this zigzag becomes obvious, I'm going to sell on this correction, because in this case we could have another impulse in wave C, and this wave 2 in this case will be like a double zigzag pattern, WXY. So It's actually a usual story when you've got two first waves, which you think like first one and one of 3 or one of C, and if they could be a zigzag, in this story you could be very careful here on pound versus yen or whatever. So it was like a small theory lesson, and let's open euro dollar where we've got this. This wave 4 seems to be ended in a form of a double zigzag like ABC, triangle, and another ABC. So it means we've got here an impulse, and you can see its structure here on the 15 minutes chart. I mean like 1, 2, 3, 4, and 5. Wave 1 here is the biggest, but it's okay because our main rule tells that only wave 3 can be the shortest in impulse. What's more, we've got here a bearish impulse, which could be this wave 1, so it seems like wave 2 ended here, and it's time for wave 3. I mean, where's wave? Just a second, something went wrong. Sometimes it happens. These waves flown here. Sorry about that. I need to do something like that. It's a small bug on TradingView. So sorry about that again, and I'm going back to my 15 minutes chart, and we can see this. Oh no. Like that and like this. Okay, now we're ready. So it seems like we've got here wave 2, so it's time for this wave 3 inside this possible wave A, sorry. Why I've got here wave A? I can show you just a second, because I need to open my daily chart, and you can see that we've got a diagonal triangle in our wave C, and as you probably know, if we've got an ending diagonal pattern, all its waves must be zigzags. I mean, wave 1 must be a zigzag, wave 2, wave 3, wave 4, and wave 5. All of them must be zigzags. So, I mean, on this chart, we could have this pattern in wave C, so I'm waiting for just another zigzag in this wave 5, and it means we can have this wave 5 here on the 2-hour chart in a form of kind of a zigzag. So it's just the first bearish impulse in the direction of this wave 5. To be honest, in the direction of this wave A, of this wave 5. However, as you can see, we've got on the daily chart this moving average line 250, and now the price is trading a little bit above this line, so you can see it has been acted here as a resistance for this wave 2. So until the price arrives below this line, this wave count will be unfortunately unconfirmed. So we should be very careful if you are trading euro dollar right now. I mean, okay, we've got this impulse and this possible wave 2, but you also should keep in mind that it could turn out like a zigzag of some kind, like ABC. So when you, for example, because today is Wednesday and our next webinar is going to be on Monday, so you could have this impulse, for example, tomorrow, and when it ends, it'll be actually the same story I was telling you just a few minutes earlier. I mean, this one. If you've got two first waves or even two impulses which you think could be 1 and 3, I mean 1, 2, 3, but this movement could be also a zigzag. If you see this story and if you see that the second impulse has whole package, I mean 5 waves, like 1, 2, 3, 4, and 5. If you see that, well, it's a good time maybe to close one of your trades, because I usually open some of them during the price movement. And you should wait what you can have here. Let's imagine this wave 2 ends like this. Okay, let's imagine that we've got this bearish impulse and you have some short trades. Okay, so when you see 1, 2, 3, 4, 5, and you think, okay, we've got just another bearish impulse, then it's a good time not to open new trades here. You should wait for a correction. If you've got something, any kind of light correction, I mean, like lazy correction, which means it just bears having some rest, yeah, in this case, then okay, you could mark it like wave 4 and wait for wave 5. It's fine. But if after this impulse you see like boo and some price movement, for example, you had here, which could be an impulse, not a correction of any kind, in this case you should wait what you are going to receive here. So please be very careful at any cases when you consider that this correction, I mean this price movement could be just a zigzag and the bigger correction could be continued. If you see this, it's the best time to be very careful. So if this small correction you can increase your position, I'm going to do so. If not, if it's something like this, it's firstly not a good time to buy, to sell at all, and you should wait which wave you finally got here. Another market today is pound, where we've got this a very difficult part. I mean, we've got this impulse, which is pretty easy, and it's wave 1 here. We've got an extension in the third wave here. That's fine. And then a kind of a wild horse arrived, and we've got some crazy price movements, which could be an ending diagonal pattern in wave 5 of wave A. But there's one little thing on this chart you should know. As you probably know, wave 5 could be, in some cases, wave 5 can not be higher than an ending point of wave 3. In this case, it's the high of wave 3. But This rule applies for impulses, so sometimes wave 5 can be lower than the ending of wave 3. It usually happens when you've got a very, very fast wave 3. For example, if some important news released or something like that, then we've got a correction, and it means price can't go higher than the ending of wave 3. So in this case, sometimes wave 5 finishes lower than the ending point of wave 3. It could be on impulse waves and also on ending diagonals. But if you see this on story with an ending diagonal pattern, you should be, careful, because it could turn out like something, like this. So until the lower side of this diagonal pattern isn't broken, you have an opportunity to see this pattern a little bit bigger. So you should be very careful in these stories, and I think it's not a good idea to trade until the lower side of this pattern be broken and we can see that, okay, this bearish wave A is likely started. As you probably remember, this impulse, this one, is a part of wave 4. So it means we can have here a correction, maybe a zigzag, maybe a flat pattern, and then we're likely going to have another impulse or an ending diagonal in wave C. So I'm just waiting when this line be broken, and if so, I'm going to sell on local correction. But for now, we've got just a pullback, so it means this wave 5 has an opportunity to be continued, so pound is still a kind of a dangerous market now. Another interesting moment is Japanese yen, because we've got this correction in a form of a double zigzag, which is likely wave 2. We've got here an amazing bullish impulse, which is likely this wave 1. It's like 1, 2, an extension in wave 3, wave 4, and wave 5. Wave 2 here is a double zigzag, and we've got a pullback from the 61% from this wave 1. And as you can see on the 15-minute chart, we've got a leading diagonal pattern in wave 1, a flat pattern in wave 2. As you remember, in flat patterns we've got a zigzag in wave A. Any correction pattern could be formed on wave B, and wave C in this case is an impulse or an ending diagonal. So we've got this something like that. A zigzag, a flat pattern in wave B, and an ending diagonal in wave C, and there's also a 4 pullbacks in a row from 50% level of wave 1. Also, there's another impulse, this wave 1, and that's again same story I'm telling you at the beginning of today's wave trading. We've got 2 impulses, which could be also a zigzag. Let's imagine we've got here a zigzag. Is it possible according to the Elliott wave theory? Yes, that's fine. And in this case, this correction, this wave 2, could be continued like this. So this wave 2 could be a little bit bigger in this case. So I've already have one short trade I'm going to show you. Just a few moments and we reach this pair. So as you can see, I had a long trade here and I've got a break-even stop loss. Then I've got some real loss, but it was small, and now I've got one short trade. And here I'm doing actually the same things I'm doing on pound versus yen, because we've got two impulses which could be, a zigzag. So I want to trade an opportunity to have possible wave 3. So I've got this trade, and that's a reason I'm not going to close it, because my idea is trading this movement, and this trade, it's a good one to build a series of long trades during this possible impulse. But I'm not going to buy more, because it could be, like another bearish movement, like WXY correction and another. So I'm waiting when we've got this possible wave 2 and this wave count, which means we could have an extension in the third wave. And in this case, I'm going to open the second long trade only when this wave 2 ends, maybe in a form of a zigzag, for example. We'll see. And only when a small bullish impulse arrives somewhere in here. For example, price movement like this, but a little bit smaller. Maybe, sorry, sometimes it happens. So if you have here a correction and a small bullish impulse, small correction, then I'm going to open the second trade to trade this possible wave 3. If this correction become bigger, like a double zigzag, like this one, then I'm going to have my break-even stop loss, and then I'll be out of the market until maybe we got pullback from this level, 78% from this wave 1, and if another bullish impulse forms from this level, then I'm going to buy on the local correction exactly the same I've done here. It was a correction, a pullback. I've bought here, and after this a little bit big correction, I did it again on this small impulse and this small correction. Maybe I have okay. So that's my trading plan on Japanese yen, because it has a good potential to have another bullish impulse, maybe even bigger than this wave 1, but there's a risk to have this wave 2 bigger. So I'm going to trade this opportunity, but in a careful style. I'm going to do it to avoid possible losses if this wave 2 turns out to be bigger. So that's all for Japanese yen, and let's move on to another market, which is Swiss franc. As you remember, on Monday, I was telling you that this level, 78%, is a quite interesting, because usually these kind of big corrections form a pullback from this level, and it seems like it's our case. But what's interesting here is I'm going to open for you the daily chart of Swiss franc. Let me do it a few seconds. And as you can see here, we've got a possible ending diagonal. And what's interesting here is this lower side of this pattern. I mean, it seems like we're going to have the third pullback from this line. So it's like a double confirmation for this wave count. I mean, this Fibonacci level 78% and the lower side of this pattern. I mean, an ending diagonal in wave C. Also, as you know, wave 5, wave 3 and wave 1, in the ending diagonal pattern, these waves are zigzags, so I am not counting this wave 5 like 1, 2, 3, 4, 5. I mean, this price movement is an ending diagonal, so I should find here zigzags. However, sometimes we could have impulses inside an ending diagonal pattern in wave 1, wave 3, and wave 5. But most cases, it's usually zigzags. So here I'm waiting for a good bullish impulse, which could be wave 1. So if we see this impulse, and then we're likely going to have a correction which could be wave 2. If it happens, I'm going to buy on this correction to trade this price movement on wave 3. Why I'm looking at Swiss franc? Because its market usually has a very fast impulses towards the main trend, even the local one. For example, the last impulse, this one was pretty fast, and this price movement in wave 1 is also interesting. So here on the daily chart, we can have a zigzag in wave 5, but this wave C is likely going to be an impulse wave, so I'm going to trade this movement. And to be more specific, I'm going to trade this wave 3, which could be pretty fast. So if this correction arrives, I'm going to buy, and if we see a plain and clear extension in a third wave, I think it could be a good time to build, which I called in Russian like trading pyramid, because I usually open trades step by step, but only if markets go in the trend direction. I'm not increase position if the first trade has loss. So I am only increase position in a situation like this. I've got a trade, I have a break-even stop loss, so okay, I can find an opportunity to buy more, because it's the worst idea ever. I mean, if I were had a trade here like this, okay, let's imagine I've bought here, and if price goes lower and I have loss on this trade, it's not a good idea to increase your position, because you doing so, you are increasing your loss as well and your risk. So I increase my position only in a situation I can move my stop loss on a break-even level or even to a profitable level. But sometimes traders, they try to trade against the main trend, and it looks like that. For example, you think this impulse could be ended here. Okay, you open a short trade like this. Sorry, what's happening? Just a few moments. Okay, you, for example, sold here. Then the market went higher, and you think, oh, that's a right moment for this impulse to be ended. Sorry. Here, and you sell again, and then again, for example, like this, and then even more. So you've got in this situation 4 long trades, and all of them has losses. So don't trade like that, because if you met with a very strong trend, you finally could have even a margin call, because if you have a lot of trades against the trend, it's very risky. So don't trade like that. It's one day just just crash your trading account. So let's go further to Australian dollar, where I've got this kind of a tricky wave count. I mean, with an expanded leading diagonal in wave 1, and also there's a possible zigzag in this wave 2. So it's a kind of interesting story, because we've got here a possible this impulse. Sorry, just a second. This one, which could be the first wave in the direction of something happening here with my wave count. So you should wait when I fix it. It seems fine now, so I can go on. Yeah. So this wave count telling us we can have a huge triangle in this wave 4. We can have here this kind of a leading diagonal in wave 1. Also, it seems like we've got here a zigzag in wave 2, so it could be a green light for this wave 3. But it's just a general, not a rule, but a principle. If you have a possible leading diagonal in wave 1 in this form, in expanded form, you should be very careful to trade it. So in this case, I am going to sell this pair in the coming hours, but only for this impulse. So, okay, when it arrives, I'm going to do exactly the same thing I did here. I put my stop loss at the break-even level, which means I'm not going to have any losses, but I'll be very careful. Why? The first reason for this is this wave 2 could be bigger, not like ABC but WXY, which means not a zigzag but a double zigzag. Okay, and the second reason is if you have this kind of tricky first wave after a huge correction, I mean this wave 4 in a form of a triangle, it means, at least this wave E could be continued. So you should try to sell in a situation like that only and only when you have a good opportunity to do like this. So you have a trade, you have a break-even stop loss, you have another impulse, maybe we're going to have this impulse here as well, and then you wait. If you've got your break-even stop loss, that's fine, and you're trying to, find another moment to sell this pair for this wave 3. I'm usually not trading for one single trade. I'm thinking to build, which I call trading pyramid, like in Egypt. So it means I'm going to open not just one trade, but a few of them in the direction of an impulse wave, usually in the direction of the main trend. So, considering that we've got here this huge triangle, I even can show you how beautiful this wave 4 is. Just a few moments. I have again, I think, some issues here. I'm sorry, it was my fault. And as you can see here on the daily chart, we've got this amazing triangle and a series of pullbacks from this moving average line, 250. So that's a reason I'm trying to sell this pair, because it seems like this trend is likely going to be continued. But considering that we've got here this controversial wave 1, we should be very careful trying to catch this price movement in wave 3. And let's move on to Canadian dollar. Wow. I mean, I did this wave count, I think, 2 hours ago, and now it's done here. So it seems like we've got a double zigzag in wave 4, which is likely going to end very soon. Why? Because we could have a pullback from the 61% retracement from this wave 3. But why this wave count is a kind of risky? As you remember, I was telling you that an ending diagonal must have zigzags in wave 1, wave 3, and wave 5. But here, it seems like we've got here impulses instead. I mean, like 1, 2, 3, 4, 5. Okay, 1, 2, 3, 4, 5. Fine. But it not means I'm going to buy this pair just right away. No, I need a confirmation, which could be a price movement like this. I mean, I mean, sorry. I mean, this impulse and this correction. So if this kind of pattern, I mean an impulse and a correction arrives here, it could be a confirmation that, okay, this wave 4 is likely ended and we can have another impulse in this wave 5. But considering that it's an anti-diagonal and it's too risky here because we've got impulses instead zigzags. In this case, let's imagine we've got this possible impulse, I mean this one, okay. Also we've got a correction in our imagination so far, and if it happens, so I mean a double zigzag in wave 4 and a bullish impulse in the direction of wave 5, I'm going to trade, but only the one bullish impulse, which could be wave 3 of wave 5 or even wave C, because sometimes it's a very rare, I mean less maybe than 1%, but we can have mixed structure, like 2 impulses and 1 zigzag. So I don't want to risk here, so if I have here an impulse and a correction, I'm going to trade only this impulse. So as you can see, in most cases, I'm just waiting for a right moment to trade, not just opening trades everywhere for each wave. I'm trying to find a good opportunity and trade it afterwards. And let's see some other markets in my MetaTrader, and let's start with one of my favorite ones is Euro Pound. It seems like we're going to have this extension, I mean this one, in this wave 3. So it could be like 1, 2, 3, 4 and 5. Also, if you watched my last webinar on Monday, I also telling you that it could be like a zigzag, like A, B, C. So I'm trading here only this impulse, and when it ends, I'm going to close all my trades. I've got 3 longs so far. However, as you can see, we have here 3 first waves, which means we've got here this wave 1, this wave 1, and this wave 1 in the direction of this extension. So it means this trade is risky, and this wave count is risky as well. But here we've got a quite interesting thing. I think I was telling you about wave degrees last week, so it's again a good example, just a quick reminder for you. Wave 2, I mean this wave 2, is a quite big hair. This wave 2 is much smaller, and this wave 2 seems like actually same with this wave 2. So it's just a good signal to have an extension, because if you have an extension, I hope you know what it means. It's just a huge impulse if we compare this impulse to other ones. And extensions are quite good for trading, because when you've got a price movement like a rocket, it's good to add position on corrections, and when this kind of impulse finishes, just go out of the market. So I think we could have here this kind of extension. What's more interesting, we got here this price movement, which could be like ABC, a bullish impulse, so it could be a zigzag and an impulse in direction of this wave 3. I've got here 3 long trades. I don't have a risk because I've got a profitable stop here. I've got minus stop here, so overall it's a 0. But if this price movement turns out to be even bigger, okay, I am going to increase my position somewhere in here. And if I buy, for example, in the middle of this wave 3, I likely will have an opportunity to move my stop losses again and make them overall break even. I mean, if you have some pluses and some minuses, it could be overall like 0. So that's my plans for Euro Pound. And let's move on to other market, which is Australian dollar versus New Zealand dollar. So here we've got this amazing impulse in wave 1, but this correction, I mean this wave 2, is very difficult. So all you need to do here, and what I'm going to do here, is just wait when these corrections, this correction in a form of a double zigzag ends, and when you see something you already had here, bullish impulse and correction. If we've got the same story here, then I'm going to buy and I'm going to do the same things I've done here. So the first trade, the second trade, and when this impulse ends, I was out of the market. Okay, and we are going to see some other pairs. We've got, I think, 9 minutes more. If you have, sorry, there are some questions, and I think I need to answer. Just the first question is about Australian dollar. Can the larger bullish impulse on the daily chart be the wave A, then wave as a triangle will be another bullish wave C? It's a kind of a very good question. Sometimes it happens, and it's like, more difficult level. So I didn't want to give you today some heavy knowledge, but yeah, even if here we've got just a zigzag, it's also an opportunity to have this kind of a correction like A, B, C, D, E, and another zigzag here. But I think now this possible wave E of this triangle is quite small, so it's not the case for now, but it's very important to see the price behavior on this line. So, for example, we've got this triangle, okay, like A, B, C, D, E. We are thinking that the price is declining in this wave 5, and it's the obvious decision in this case. But you should draw this line even like that, just to remind you about an alternative wave count. And if you've got a pullback from this line or nearby it, that's a signal. And if at this moment of pullback you've got a whole zigzag, like here for example, you've got just ABC and another pullback from this line, and if a small bullish impulse arrives afterwards, yeah, it could be a reason to have something like that. So it's a question about maybe a couple of next weeks, and if we are finally be here, then I think all perspective will depend on how price deal with this line. So I hope I answered your question. I see so many points here. Impulse have 1 to 5, so I'm confused. If you're confused what I'm talking about, the best thing is just find this book. We are going to make a special page with just books you should read. So it's book called, it's like Elliott Wave Bible. It's called Elliott Wave Principle, Key to the Market Behavior, written by Robert R. Proctor. So just Google this book, just read this book, and you will have the better understanding of what I'm talking here. Because usually, I think it's just wasting your time if I'm just retell you this book. So I can tell you something more how you can trade it, but you have 4 days until Monday to read this book, and on Monday you will understand me much better than now. I've got, I think, kind of same questions here, and I think I've already answered it. And someone asking me about Euro versus Japanese yen, and I think it's going to be our final market today. To be honest, I don't have wave count. Oops, I'm sorry, I did something wrong. I actually don't have wave count for this pair, and I think it could be interesting for you if we do it together right now. So I'm going to open a new chart for this pair, and we can look what we can have here according to the Elliott Wave Principle. So here we are, and there's our daily chart. So we've got here, I'm going to tell you just basics with this kind of, rectangles. So the first thing we should to do is decide, is this price movement an impulse or a zigzag? In this case, it seems like we've got here a zigzag, because this correction is the biggest one in this story, and as I see, it seems like we can have here like 1, 2, 1, 2, 3, 4, 5, and I think I missed something. I think, yeah, it could be like 1, 2, then 1, 2, 3, 4, 5, like wave 3, and wave 5 here. So this price movement could be like ABC. Also, we've got something here which also could be a zigzag. I'm not going to details now, but it seems like that. And it seems like here we can have also a zigzag, but the last structure of this waves is a kind of tricky. Because we've got, as you can see, an impulse wave here, like I think we've got here an impulse with an extended wave 1, like 1, 2, 3, 4, and 5. And also it could be like this. It could be a flat pattern, I think, as well. So I think the best idea here is wait. So if this price movement is wave 1 or even wave A, this one could be just wave 1 in the direction of wave 3 or wave C. So we should wait here for a correction, which could be in this case wave 2, and buy only when we have a sign that we could have a wave 3, which could be a small bullish impulse in the direction of this wave 3 or even C. But I think overall it's a kind of a risky market, because we've got here kind of a fast and deep correction. So if small correction happens here and a small bullish impulse arrives afterwards, yeah, it could be a moment for trading this wave 3. But now the best idea is stay away, because this correction could be, we've got, let's look 30 minutes chart. This impulse, last one, seems like ended. Just look, 1, 2, 3, 4, and an anti-diagonal here in wave 5. Like this, the upper side and the lower side of this pattern. So if you buy now, you can have, now we are here, you can have about 200 pips loss or even more. So I think it's better to wait this correction. Also, it's not good idea to sell, because you trading against this local trend, and it's not my style. So here the best idea is wait for this correction, and if we've got, I even can show you an example. If we've got something like that, a zigzag, an impulse, a correction, yeah, this market in this case will be good. Now better just wait when this wave count becomes more clear. Can we have one more bullish impulse or not? So I think I don't have more time, so I'm going to answer to the last questions. How can I see a dot wave with so many alphabet? It's not so many, it's just enough. We've got, let me show you, just from 1 to 5, to mark impulses and ending and leading diagonals. We've got ABC for zigzags and flat patterns. Also, we've got ABCDE for triangles. We've got five triangles in the family, so I'm going to tell you about these patterns in our next meetings. And we've got special things for difficult corrections like this WXY we use for double zigzags and double 3 patterns. I'm going to tell you about these patterns later. And we've got these special things like WXYXZ. It's, these patterns happens so rare. I mean, not often. I mean, I even can't remember when last time I see a triple zigzag. So it's very rare. The most times you need